Good morning, everyone, and welcome to the 2021 edition of our series, Fintech Fridays, brought to you by BDO Australia. My name is Tim Aman. I'm BDO's Global Fintech Leader, as well as the National Financial Services Leader. Today, we are presenting an ASX Capital Markets session, looking back at 2021 and a look ahead to 2022. Before we kick things off, I would just like to quickly draw your attention to the housekeeping slide that is currently showing on your screen. To start, you are all automatically muted, but we'll be accepting questions throughout the session, and a few people have actually sent questions in already. And you can submit these using the Submit tab at the Question tab. We'll try to get to as many questions as possible. However, if we cannot respond to your question, we will follow up with you after the webinar concludes. If you're experiencing any technical difficulties, please click the support button, which is one of the bottom tabs on your screen. And finally, this session is being recorded, and all registrants will receive a follow-up email containing the slides, a link to the recording, access to register for sessions for next year, and the speaker contact details for all of us. For fintechs, capital remains a critical component to their success. With Australia offering a vibrant capital market, it's important to understand how they work, how to tap into them, and what the next year holds. Today, I'm joined by James Posnett. James is a Senior Manager, Listings Business Development at ASX in Sydney. He has over 15 years experience in financial markets in Australia and internationally. Since joining the ASX in 2012, he has been responsible for the development of listings and capital raising business, both domestically and globally. He works with companies from a broad range of industry sectors, including technology, healthcare, and resources. I'm also pleased to welcome back Sebastian Stevens, BDO's private equity lead partner. Seb is the partner in charge of BDO Sydney's advisory group and leads the corporate finance teams and brings over 25 years of experience in all aspects of corporate finance advice. He has significant experience in providing international and cross-border services, including international coordination of assignments. Welcome both.
Okay.
To begin with, let's kick off today's session with the polling question from our audience. I think, obviously we've got James on, and he's from the ASX. But we wanted to start off with a quick poll. Which stock exchange below has attracted the highest IPOs in 2021? There's a lot of good exchanges there, and obviously Seb and James would be very, very familiar with the listing rules of these different exchanges. And a few of my clients are listed in London as well and in New York. So we'll just wait a second here for a few responses, and then James, I'll hand over to you to talk about how the ASX has been doing from a world perspective. Okay. Okay. Not a lot of people thinking people are going to Hong Kong or Singapore. So New York and the ASX. So James, maybe I'll hand over to you, and you can talk a little bit about sort of what you've been seeing in the global markets in terms of listings, and we'll put up some of your slides.
Tim, thank you very much, and good morning, everyone. I think we should probably move to the next slide, which is kind of the big reveal. Some astute people in the audience. So the short answer is ASX in terms of number of IPOs, if we're talking about operating companies. But as you can see from the chart there, if we include SPACs, it's actually New York Stock Exchange. So there's kind of two answers to that question, but it's very interesting to see that feedback. Look, it has been an extraordinary year for IPOs. In fact, the global IPO market is at an all-time high. So this is literally the busiest year we've ever had if you include SPACs. So about $550 billion has been raised in the IPO market this year so far, and about 2,500 IPOs if you include SPACs, as I say. So it has really been an incredible year. This has obviously been driven by a lot of government stimulus since COVID, and we've also seen some really interesting sort of deals that are coming through that have sort of been in the pipeline for some time. pretty much all exchanges were up on the year, apart from Hong Kong, which actually suffered from the Chinese clampdown on tech companies and regulation in particular. So yeah, look, in short, it's been an incredible year, but I would say ASX is an outperformer, as it has been for quite a number of years in terms of volume.
So James, just one quick question.
Yeah.
Sorry, just a quick question, James, on SPACs, because obviously it's a bit of a US phenomenon, and everyone looks at the valuations that people can get through SPACs. Do you think other global exchanges will look to recognize SPACs as a way for people to list on their exchange?
Yeah, look, it has been a really hot topic. Obviously, part of the reason it's become so big in the US, of course, is because it's kind of correcting the overburdensome regulatory environment in the US for IPOs. So that's part of the driver there. Other exchanges have been looking at it. LSE actually relaxed its rules to allow a US-style SPAC, so we may well see some more there. And Singapore and Hong Kong have also looked at it. So yeah, look, I think we're probably likely to see some more overseas, but predominantly it's going to be in the US going forward. There have been, 600 SPACs in the US this year, which is actually, quite incredible. It's an all-time high. And if you look at last year as well, it was about 850. Which is actually half of all SPACs that have ever happened. So if you put that into perspective, that's actually quite incredible. So we're really seeing a sort of once in a lifetime, in many ways, event here. And yeah, look, I think it will remain US centric. They're actually not allowed in Australia at the current time. We have looked at it, but it's we've had a bad experience with SPACs in the past. And particularly in the sort of late 80s. And as a result, there was some changes to the listing rules that basically meant that SPACs were not allowed. So in our view, we're not amazingly concerned about that, actually. We feel that the IPO market is still extremely vibrant in Australia, as you've seen from those numbers. So I think that would be our position for some time.
And James, is it worth just sort of talking through the concept of a SPAC, just for some of the audience who don't sort of understand that?
Yeah, look, it's a special purpose company is what it actually stands for. And so, you're raising basically a blank check. It's a blank check company, otherwise known, raising some money, which is actually through technically an IPO, but there's no operating company in there, it's just cash. And then you go out and find a target, effectively. So you go and find a company to use that cash and buy, and then that becomes the listing itself. So that in short is the way it works.
Yeah.
We have a sort of similar thing in Australia and in other markets where we have sort of backdoor listings, which is actually slightly different, but it's really about an operating company that kind of becomes a shell. It might be an ex-mining project that just ends up being cash, and the mining project is stopped, and then that shell actually goes out and looks for the targets. But that, just to be clear, is actually quite different to a SPAC where you're raising fresh funds purely for that acquisition.
Yeah, a few of my clients are interested in SPACs, but I think, I take your point in terms of it speeds up the IPO process, but there's still a fair amount of due diligence that goes into the SPAC process. And I think we'll touch on it later, but in terms of the reporting requirements, once you list in the US, obviously you're reporting to the SEC and subject to PCAOB. And I think people just have to understand the rigor of the regulatory environment there. But it is kind of funny because, I'm seeing a lot more activity in terms of SPACs. People in Australia thinking, should I be a foreign filer? Starting to see people a bit more interested, at least exploring going back to the US just because of the valuations.
Yeah, I think it doesn't take away the issues with being listed in the US, which we can probably touch on a bit later.
Okay.
And so if we could move to the next slide, in terms of the Australian market, it's also been quite incredible. So in terms of number of listings, we're at an all-time or high, since the 2007 height of the mining boom. So it's been an incredible year by number, and then by capital raised, we've raised the largest amount since 2014. So it has really been quite incredible. Again, the government stimulus has happened and helped a great deal. We've also had quite a bit of sort of M&A activity, and indeed globally there's been a lot of M&A activity, which has actually had the effect of putting some cash into the hands of investors. So that's been another driver there. There's also been quite a few buybacks and special dividends that have been paid out, putting cash into the hands of investors this year. And then there's a sort of global, in a global sense, in the Australian market, the superannuation funds are obviously another key driver, which we'll get on a bit later. In terms of sectors, we've seen really across the board in terms of the sort of new companies coming to market. We've seen a lot of sort of tech sector and fintech companies coming to market, healthcare, industrials, consumer. So it has really been across the board, but over and above all of that has been the junior miners. So the junior mining companies have accounted for over half of all listings this year, and that's a reflection of the elevated commodity prices. And in a strange way, you've got a kind of link to tech in a sense there, because you've got some copper stocks, lithium and nickel, all of which have in common the fact that we've got a sort of structural change happening in terms of battery technology, the use of electric vehicles and so on, which is going to continue to go forward. And so that's actually meant that the prices have remained elevated in those commodities. In terms of copper, of course, Dr. Copper, as it's sort of informally known, is really tied to industrial activity. So, of course, we've seen copper going up on the back of some reopening in economies actually driving forward. And then, interestingly, gold, which is not normally tied to the copper price, but is actually also elevated because in times of uncertainty, of course, people go to gold. It's an inflation hedge and so on. So you've seen this situation where all of these commodities have been elevated price levels, which has meant that mining projects have become viable. And so we've just seen a huge swathe of junior miners coming to market. So it's been quite interesting from that perspective. Just in terms of the next slide, I show here the top 10 by market cap in terms of IPOs this year to date. And there have been a few sort of really interesting features here. So you've had sort of more $1 billion plus IPOs than we've had for a number of years. And you can see there 6 of the top 10 are $1 billion plus. And in fact, we've got a company listing in a couple of hours, APM, which is a human services company valued at about $3 billion, which should be listing today. So that'll take the number to 7 for the year. We actually have one that's sort of on the way, Ventia, which is a sort of infrastructure services company, which would be a couple of $1 billion market cap. So we sort of end the year, and assuming that actually happens, we'll have sort of 8 of the top 10 will be $1 billion plus listings, which is a great year. In terms of the companies themselves, some real sort of highlights on the tech side there. PEXA, which will be known to many people. On the sort of fintech side, Pepper Money, the challenger bank, Judo Bank also came to market. I'm not sure if you'd necessarily call it a fintech, but Latitude obviously has a lot of sort of tech-enabled services as part of its business as well, so that's interesting. And one that may not be that well known is KeyPath, which is actually a Chicago-based online education company that came to market as well. GQG, the asset manager from Florida, was the largest IPO of the year. And that really came to ASX because the valuations of asset managers on ASX are comparatively quite favorable compared to the US markets. So that was a great win for the market. And then, of course, this week we had SiteMinder. So SiteMinder is a SaaS business in the sort of hotel space. And that was really interesting for a number of reasons, as a few of these other companies have been interesting in they've been VC or private equity backed.
Yeah.
And so SiteMinder was backed by TCV, which is a growth equity investment firm out of Silicon Valley. The IPO enabled TCV to actually exit completely on the IPO, which is not actually something you can do quite so easily in the US market. But it also allowed the founders to sell down. It also allowed another VC, Bailador, which is actually a listed VC in Australia, to sell down a little bit as well. So that also highlights, just the flexibility of the IPO market in terms of those sort of private equity backed deals. So overall, Tim and Seb, it's been a great year in Australia as well.
Just
and
a quick
I guess
question.
Seb,
Sorry.
go ahead, Seb.
Sorry. Yeah, I was just going to say one of the things that I've seen driven some of the growth in the S&P and NASDAQ overseas or NYSE and NASDAQ, I should say, is that sort of movement in tech stocks. And I think that, based on the analysis I've seen, that the tech stocks in Australia have performed equally well. The difference is there's more of a weighting to tech on those US exchanges than here. Is that something that the ASX is looking into? How to get more weighting in tech on the exchange?
We do have a slide that I can share with the audience a bit later on the tech index, which we actually launched in February 2020. So this is an S&P index that tracks the key stocks in the tech sector on ASX. And of course, the reason for this is to really heighten the profile of those stocks and also promote investment, particularly from passive investors into that. And we've been looking at growing the sector on ASX for some time. In fact, we've had over 100 tech IPOs in the past 5 years. So it is something we've consciously been working on, both as an exchange in terms of the listing team, but of course with the ecosystem in Australia, with the bankers, lawyers, accountants, and investors to together promote that industry in terms of capital raising. So at the moment we've got about sort of 6% of the market cap is actually tech, and it's sort of well over sort of 20% in the US is tech. But I would say the US is a bit of an outlier in terms of global markets, other than maybe China, which also has a very high tech percentage in the broad index. And it's also a reflection of the fact that we've got some extremely high market cap sectors like the financial sectors, where we've got sort of 4 of the world's top 20 banks listed, and 2 of the largest resources companies in the world listed, BHP and Rio. So it's also a reflection of the fact that we've been incredibly successful in those other sectors. Yeah. We've actually got about $200 billion in market cap in terms of the actual tech sector currently, and that's been growing quite nicely. And in terms of the actual index itself, it's kind of been tracking the NASDAQ over time. So you can see that that's as a reflection of the strong performance of the tech sector here as well.
Yeah, definitely. I mean, we do a lot of work with the US private equity funds and other private equity funds, and I think one of the advantages of the ASX, and I'm sure you'll get to it, is that you can actually list a business a lot earlier than you can in overseas exchanges, and I think that's a massive difference for the ASX over some of those exchanges. But I'll let you get to that later, I think.
And Seb, just a quick one for you, I guess, like in terms of obviously the ASX has been very, very busy,
yeah,
but from your perspective, how do you compare this year versus last year in terms of sort of IPO activity?
Yeah, look, it's been incredible. I think.
Yeah. So the IPO activity. Oh, sorry, Seb. Please.
That's okay. I think there's a bit of a delay. No, I was just saying that the IPO activity has been incredible from what I've been seeing. It's I haven't really seen this many listings coming to market. There are, to be fair though, I think a lot of them aren't necessarily ready yet, and so we've moved a bunch of those into next year. And that's mainly because I think the markets are so active and there's a real appetite there at the moment, but a lot of these companies aren't yet set up with the right infrastructure to get there. So I think that's sort of the timing is probably the bigger issue at the moment. But having said that, it's still incredibly busy. Sorry, James, go for it.
I was going to say the same thing, Seb. Sorry, there was a bit of a delay there. Yeah, look, it's just been an incredible year, and like I say, the biggest year in terms of volume since 2007, which was the height of the mining boom and also the height of the bull market.
Yeah.
Okay. I have some slides to share. And there's a few in here, so I'll whip through them relatively quickly, but I thought it would be useful just to show everybody how we position ASX, both in Australia, but also when we go and talk to overseas prospects that might well be looking at ASX as one of the options for capital raising. So, fundamentally, we have a very active market, as we mentioned. We have about 120 listings a year. One of the most important attractive features of the Aussie market, though, is the pension fund and the assets under management here. So we're the 5th largest pension fund market globally, about $3 trillion Australian under management currently, which is really the reason I do this job. It would be incredibly hard if that wasn't the case, and is actually the real reason we have such an active equity market in Australia. We have 2,000 listed companies, and they go across a broad range of sectors. And traditionally, it has been, as we mentioned before, financials and resources companies. But increasingly, the investors are looking for growth opportunities, and that's why we've seen just so many tech companies coming to market over the past 5 years in particular. We've got a long history of supporting early stage companies on the market as well, because the sort of tradition of that mining explorer, really the ultimate startup, started about 150 years ago, where you dig a hole in the ground and hope to find some gold or whatever commodity you're looking for. And so we've been listing that type of company for well over a century, and the public market investor is quite used to high risk ventures in the public market space, and hence that's translated quite neatly into biotech, medtech, and more recently technology companies in a broad sense over the last few years. We do all this in a pretty robust regulatory environment, though, so it's not as overburdensome as some other markets around the world, but it is a robust regulatory environment that we operate in, which is really important, of course, for the confidence of investors. And then finally, in terms of the actual trading on the market, we're among sort of global exchanges in terms of liquidity. Trade currently about $8 billion of equities per day. If we can move quickly to the next slide. This really shows just the magnitude of the money available in Australia, and there's two features here. One's the size of the market, which is quite incredible. In terms of assets under management, we've got 3.3 trillion Australian dollars currently. Now this is projected to grow to about $10 trillion by 2038. So you can just see that is an absolutely incredible growth, and that money is going to need to find a home. And increasingly, we're finding it difficult to find a home in the local equity market, and hence, part of the reason Seb and I and others have been traveling the world is to grow the menu of investment opportunities on the market, because there's a ready audience of investors looking for that sort of company, particularly in the growth sort of sectors. And the other feature of the market is it's got a large home bias. So even about sort of 80% of the Australian funds actually would rather invest in an ASX listed stock because of mandate reasons. So that gives that sort of home bias as well, and an upward sort of demand profile in terms of the investor base. If we can move to the next slide. Another thing I thought I'd mention is the secondary offerings, because this has been obviously a really important part of being listed. In fact, arguably, it's a more important part of being listed, in terms of the fact that you can go back to market and raise follow-on offerings, even more so than just the IPO, which is a single capital raising event. So last year we rated extremely highly versus other global exchanges, and this year has been a very similar pattern. So by number of secondary offerings, so follow-on offerings, we ranked first globally of all exchanges. And in terms of the actual capital raise, we ranked this year 6th, whereas last year we were 5th, so only a little bit below last year. We've raised currently to date about 24 billion US, which is a little bit down on last year, but last year was quite an exceptional year because of COVID and so on. And also in terms of the feature of the type of companies and reasons for listing, there's a lot of balance sheet repair last year in the height of the pandemic, whereas this year has been a little bit more weighted towards growth opportunities, both organic and in terms of M&A. So that's been a really, really interesting feature. But I think one of the key points about ASX is the fact that we have a very efficient capital raising framework, which has been developed over quite a number of years. So we do this in terms of placements, rights issues, and share purchase plans. But if I could give you one example in terms of placement, you can actually raise money, place shares with investors, raise that money with a low doc offering, so relatively low documentation, certainly versus the New York or London exchanges, and have that money in the door within 1 to 2 days. So that's a really, really important part of the market and a really important part of being listed. The type of companies we've seen have been really across the board, raising follow-on capital this year, but it's also included tech companies like Xero and Afterpay. And in fact, if you want to count up all of Afterpay's offerings over the 5 years since it's been listed, it has raised over $3 billion over its time as a listed company. So that really just goes to show the amount of money that can be raised in this market. If we go to the next slide, there's another point here that I wanted to make on index inclusion. So obviously index inclusion is really important to attract investors, maximize liquidity, and also raise the profile of your company, quite frankly. So we have S&P indices in Australia. So we have the S&P ASX All Technology Index, but other sort of broad-based indices are the ASX 300 and 200. And really the key point here is the fact that you can actually enter the key indices in Australia far earlier than you can in other major markets around the world. So if I take the S&P 500, the entry point there is about $14 billion market cap US before you're even into the index. Whereas our sort of blue chip index here, the ASX 200 is a $1.8 billion entry point. This is in US dollars, just for comparison reasons. But we also have another, as I mentioned, broad-based index, the ASX 300, which is a $482 million entry point. And then the All Tech Index is even lower, $128 million entry point. So you're getting access to the institutional investors far earlier than you would in other markets. I've included here some of the top investors that are active in the market, and those names will be familiar to many people, but really this is really to show that the fact that it's broad based in terms of where they're from. We've got some very large local investors like Australian Super, but we've also got the Fidelities of this world as well. We can move to the next slide. I just wanted to drill down a little bit more on that in terms of what that means. So if you look at that in terms of all of those reasons, the demand profile that we've talked about there from investors and index inclusion, that all helps promote valuation over time. And you can see here, if I just concentrate on the tech side, we have the all tech indices here. We've got a couple of valuation indicators, the price to sales and EV sales. And you can see here we compare quite favorably with the NASDAQ and the S&P 500 Infotech Index. But what I also wanted to highlight here is if we take a look at the companies below the S&P 500, so if we take just the next 400 below and then look at the tech companies in there, that's the S&P Mid-Cap 400 Infotech Index. The valuation is considerably different for tech companies. And this is just one example, but what we increasingly see is if you're not in the S&P 500 index, you tend to get lost because there's so many companies listed in the US market, and there's a definite bias to larger companies. So what this means is you can list on ASX and get more attention, which then leads to more favorable valuations, generally speaking, over time, particularly in the tech sector. Now, these are very broad numbers, of course, and each individual case has to be, looked at in isolation, in a sense, but also against specific peer groups that if you're a SaaS business, you want to look at only the SaaS companies to make this comparison, of course. But actually, we see this quite across the board in terms of the tech sector in Australia. So that's a really important point.
James, can I just ask you a question there? Do you mind explaining to people why it's important to be on that index and therefore getting that institutional investment as opposed to a lot of retail investment? Is it worth sort of going into that in a bit of detail as to why this is very helpful?
Yeah, look, in short, institutional investors are generally more sophisticated than retail investors. So that's the starting point. But what this means in a practical sense is you've got the weight of money with institutions that will be able to support you on an ongoing basis. But if the other point, though, is if times are bad, which they inevitably will be good and bad as a listed company, as in if you're an unlisted company, it's great to think it'll be a straight line growth over time, but it tends to not be just that straight line growth and everything being rosy forever. When things are bad, retail investors do tend to run for the door and will be more likely to sell your stock, whereas institutional investors, as a general comment, will tend to stick with you and be there for the longer term, and may even buy more of your stock at the time because it's a buying opportunity.
Yeah, and we're starting to see that obviously with a lot of fintechs. If you look at they're obviously not listed, but you're starting to see a lot more institutional investors trying to take strategic shares before actually the listing process. So that's probably the activity I've seen in the last 12 to 18 months, particularly with the bigger banks. They're obviously started a lot of investment companies sitting off to the side of the bigger banks looking to take equity stakes in fintechs. So I think it's going to be interesting because if you come back to the startup fintech, at a certain point, and Seb will probably talk about this later, but they have to raise the level of funding that they're getting, and they can't get it just from friends and family. So you're starting to see people with the listing getting the institutional investor, and also pre-listing, because people are starting to do a lot more due diligence.
Yeah, we're also seeing, I mean, that's also including the pre-IPO investors as well. So in a number of those sort of fintech examples I think you're thinking of, we've seen some pre-IPO money coming in where it might be invested with, this is public market investors playing in the private markets, basically.
Yeah.
And so you've seen those investors increasing over time. There's probably around well over $1 billion in under management in the pre-IPO space now in Australia, which is a very healthy part of the market. And from our perspective, from an ASX perspective, given you can list very early, there is a risk that some companies come a bit too early. So that's had the effect of supporting the company, allowing it to grow to a point where it is actually at a good stage to list and in good shape to list. And we'll get into that in a bit later on. And that's probably a good segue to the next slide, actually. So where ASX sits is actually really sort of competing in the tech sector with sort of Series C rounds or equivalent. thereabouts, or later rounds, basically. So in your sort of traditional funding cycle, and you can kind of read this slide as a sort of US style funding cycle, you'd sort of have that VC money for quite a number of stages before eventually listing once you're quite large. And in the US market, this is a reasonably recent phenomenon in a sense, because 20 years ago and even 15 years ago, the US was a market where you could list smaller companies, but now you're really talking about a NASDAQ listing at $2 billion market cap and above to justify the actual burden of being listed in the US, the costs and regulatory requirements, but also to gain attention from investors. If you're below that threshold, it becomes very hard over time. We've seen this in multiple cases. So where we sit in terms of the ideal stage for a company to list is really in that sort of $100 million market cap to 2 billion plus. And that really means that you're going to get the institutional investor support. You're large enough to get institutional investor support in the market at around sort of 100 million plus market cap. And so over time, you're likely to perform better rather than trying to come to market earlier than that. But in terms of global markets, that is still a very, very early stage. And so we see a lot of our competitors really being the private markets as opposed to NASDAQ in many ways. There's a bit of crossover, but that's kind of where we're sitting at the moment. Just to move, in terms of the next slide, to drill down a bit more on the tech sector, 7 years ago, all of the tech companies listed on ASX were about $50 billion market cap in total, and now it's about $200 billion in market cap. We've got over 260 listed companies in the tech sector, and collectively over the last 5 years, they've raised $6 billion. So it's been a good run. And actually, if you sort of look at over the last 5 or 6 years, we're ranking number 4 in terms of exchanges by volume. So again, by volume, even though obviously those deals are smaller than sort of the NASDAQ on average, by volume we still rank very, very favorably in the tech sector. And those companies there I mentioned earlier, SiteMind was a real sort of standout in terms of listing for a number of reasons, but it's great to see the challenger bank Judo come to market, and as I mentioned, the other sort of fintechs come to market as well. Last year we saw a number of non-bank lenders come to market, and as we've seen this year as well, and actually there's a few in the pipeline looking to come to ASX in the next few months. So just on the tech sector, on the next slide, the index, as we mentioned, has kind of performed pretty much in line with the NASDAQ since launch. You can see the sort of top 10 index members there. I mean, Xero and Afterpay are obviously standouts in terms of international recognition and relevance for your fintech audience. We've got 82 members of the index currently, and 30 of those are above $1 billion in market cap. One of the most significant parts of this index that is about to hopefully come to fruition was the announcement that Square will be acquiring Afterpay. So this is a sort of $29 billion deal. It's really significant. It's a real landmark transaction for many reasons, but really sort of 3 key reasons. It endorses and really is testament to the importance of the tech sector on ASX globally, and it shows just what a great story Afterpay is. Afterpay listed in 2016 as a $160 million business, raising $25 million. And as I mentioned, has since gone on to become a sort of $35 billion company raising $3 billion or more over that time. So it's been an incredible story. But the other really important part of this is the fact that Square will then be dual listed on ASX. So at the moment, Afterpay makes up about 20% of the tech index, and the equivalent number of shares will be quoted on ASX, assuming the transaction is complete. And so that will mean that Square will be in the All-Tech index, most likely post-transaction. Now, the transaction is still subject to shareholder approval from the Afterpay shareholders, but assuming all of that goes through as planned, Square should begin trading early January next year. So that's a great transaction, and one that we're quite keen to see happen, and actually quite proud of. Just moving to the next slide, I wanted to touch a little bit on foreign listings. So we've been around the world, and Seb, that includes you in the US, of course, going around the world and actually speaking to companies about listing on ASX for all those reasons that we talked about earlier. In terms of number of foreign listings, we've got 260 to date. We've had over 100 foreign listings over the last 5 years, 47 from the US. New Zealand may seem like an obvious one, but it's been an extremely good source of listings for us. In 2012, we only had 18 Kiwi companies listed, and now we've got 64. 0, of course, hailing from New Zealand, which is a sort of standout in the tech sector. But we've also seen listings from smaller markets like Ireland, Singapore, like New Zealand, also kind of like island states, because it's quite hard to have an equity market when you've got a small country and actually attract a really sort of active, particularly small and mid-cap space, and be active in that sort of tech space. And then, as we touched on earlier, the US companies coming to ASX is really related to the fact that you need to be quite large to justify a listing in the US. And a lot of those investors, will tend not to look at you until you're sort of S&P eligible, S&P 500 eligible. But it's also about just that visibility of being listed in the US. You also need that sort of analyst coverage, an ongoing visibility to justify the listing there. I'll just move to the next slide. I thought I'd share here some examples. We've already talked about GQG. There are also, KeyPath, which is the online education company from Chicago. But actually, the point I wanted to make on this slide is actually it's been quite across the board. These are not just tech examples I'm showing here. But what we're seeing is sole listings, which is, sort of in GQG's case, it's only listed on ASX, but also companies that are already listed in other markets finding the opportunity to dual list onto ASX. So seeing that even though they're listed already, they still see incremental value in dual listing onto ASX. So Pacific Edge, which is $1 billion biotech company, listed this year from New Zealand. We've had NextGen, which is a Canadian uranium producer, which dual listed. It was already listed in Toronto. So this is a really interesting sort of endorsement of the foreign listing strategy as well. Just in terms of the next slide. Sorry,
James, just a quick comment. I guess it's quite interesting because if I look at sort of the fintech bridges that have been established, the UK down to Australia, it's a bit surprising. We're probably not seeing more UK fintechs looking to try to list down here, and maybe I guess that might be something that we see more of in the future, because there's a lot of cross-border fintechs that we work with, and some of those are obviously in the UK. It'll be interesting to see if they start to decide listing here is a good option for them. I'm not sure if you're starting to see more activity from the UK, specifically in the fintech space.
Well, Tim, you may know from my accent that I know my way around the UK quite well.
So.
It is actually a jurisdiction we think is quite attractive, and I think you're right. There will be potentially some more UK companies and potentially in the fintech sector looking to ASX. It's been interesting, the fintech journey, actually. I mean, we've got 60 fintech companies listed on ASX, depending on how broad you want to cast that category. But I think the best is yet to come in terms of fintech listings. A lot of them have been a bit too small and still been sort of developing their business models to get to in the right shape to list. So particularly we've seen that in Australia, but we've also seen that in the UK as well. So yeah, look, I think watch this space. There could potentially be opportunities there in future. I just, in terms of the process, I didn't want to go through this in huge detail, but just in a nutshell, the process is for IPO is really about sort of 5 months. We see on average from pressing the go button and appointing your advisors. So obviously the key advisors are the lead manager, investment bank, a lawyer, an accountant. And really the main step, and Seb may want to talk about this as well in a little more detail, but the main step is the preparation, actually. So the first sort of 9 weeks or so is preparing your prospectus and conducting due diligence on the company, which we've done by a due diligence committee that involves the company, but also your key advisors. And then in the Australian market, which is actually a bit different to the US, for example, you can actually earmark some institutional investors early on and test the market quite thoroughly before submitting your prospectus to the regulator and ASX, which is actually a great sort of way to list. So it's in effect what you saw years ago when the US introduced confidential filing. I mean, we've already done confidential filing all the time in Australia, but also the to and fro with the regulator is a lot less involved. So once you file your prospectus, you have an exposure period of basically 1 to 2 weeks for the regulator to come back with questions. The emphasis is really here on the advisors and the process to be right. So just without going into too much more detail, the prospectus is then lodged, and after the exposure period, you're then free to market the offer more broadly to include retail investors. And then of course, once the offer closes, you then obviously allocate the shares and come into the stock exchange to ring the bell. And an important distinction with the Aussie market versus, say, the US market is it tends to be a fixed price front end book build. So it tends to be done a little differently to the US market, which tends to be more of a back end book build. So I don't know if you wanted to touch a bit more on the process.
Look, maybe briefly then. I think I suppose the only thing that probably is not well understood is it's just quite a vigorous process. Obviously, it's a disclosure document. It's governed by ASIC, etc. So what we do notice is that there's definitely a need for a lot of preparation. You know, quite often we find some of the tech companies we're working with have obviously had limited capital resources and spent that on product development, which is sensible. But then going into this process where there's just a real focus on diligence, controls, processes, audit, needs to be some lead time at the front end. So the 5 months works, but I think you really need to start a bit earlier than that to sort of get the financial rigor in place. And so that's usually a problem because there are 2 windows or 2 key windows per year to list. So if you're trying to hit one of those windows, it's almost working backwards and making sure that you are ready to get there, because there's nothing worse than spending a lot of money not hitting that window and then having to do it again later on. So I think, our advice, without going into too much detail, is sort of get prepared early. It will save you money in the long run to get prepared early.
Yeah, I think that's absolutely right. Getting your house in order before appointing those advisors is important. But a lot of that discipline, of course, you would want to do if you were a well-run private company anyway. like auditing your accounts, for example. And that's what we often find, that a lot of the things to get prepared for listing are actually just great things to do for your business anyway. Just in context of time, the next slide is the final slide, and I just wanted to show this for a couple of reasons. This is just a visual of what it looks like on bell ringing day down at the headquarters of ASX in Sydney. One of the people on there, the top right there, is a guy called Chris Halls, who runs and is founder of Life 360, which is actually a really interesting tech company based in San Francisco. It listed a bit over 2 years ago at about $680 million market cap, and is now over $2 billion market cap. It's a great example of what can be done, and is actually one that BDO worked on for the IPO and has worked with since. So that in terms of the slides is everything I had from my side, but of course really happy to answer any more questions.
Yeah, thanks, James. And and I guess that was very informative. I guess you both kind of touched on kind of readiness. There's obviously a lot of fintechs that are listening to this, and there's some entrepreneurs that want to move quite quickly. And so I think in terms of advice, maybe Seb, I'll start with you, just in terms of you worked with a lot of startups. What advice would you give to the startup CEOs and CFOs out there?
Yeah, it's sort of echoing what I was just saying before, I think, which is starting early. I think the other key point is really getting a good team around you. Yeah, I think James alluded to it beforehand, but the investment bankers, the lawyers, and the accountants are critical. It is a really intensive process. So you basically want to have the right team around you, been there, done that before, and sort of give you that confidence to take you through efficiently. So I think that's probably the key thing for me, making sure you've got the right people around you.
And James, I guess from your perspective, when should fintechs start approaching, I guess, the ASX in terms of if they're thinking about a listing? What advice would you give them?
Yeah, look, it's a great question, Tim. We have a listings team at the ASX, which is what I'm part of. We are on the commercial side, so we're not the compliance policeman, as it were. We're actually there to talk to companies very early on about listing. And some of the companies I've spoken to over the years, I started initial conversations 5 years before the actual listing took place. And we're very happy to do that, because it might not be right now that you're looking to list, but as sort of Seb mentioned, preparation is really key. And you can just start thinking about being listed and getting that discipline in place, which is just a good thing anyway for your business early on. So we're happy to speak very early. And I think in terms of people, there are other advisors as well, like BDO, where you can start those conversations very early on. And then, as you get closer, of course, the conversations become a lot more detailed, and we can talk more specifically on, the specific requirements of the process and so on. But I'd reiterate Seb's point there. It is right, getting the right people in place, and so things like having a good board with the right skills. A board member that's had an ASX listed company before, or been on the board of an ASX listed company before, is obviously, sounds like common sense, but that's important. And worth their weight in gold is a good company secretary to help handle the various announcements and so on once you're listed. And then, of course, a very good CFO. So, we could have an entire session on preparing for an IPO, but in short, that they would be my sort of key tips.
And I guess just switching gears slightly, because it's sort of a fintech call. Obviously, crypto's been quite topical, and I guess if you had a prediction for 2022, what do you think is going to be happening with the crypto market, with the ASX?
Yeah, there's crypto, and then there's also this sort of blockchain technology. Yep. You may know in 2023, we plan to roll out our new clearing and settlement service based on distributed ledger technology. So that's what we're doing as an organization. In terms of crypto generally, yeah, I mean, it's going to become quite significant, I think, over the next 12 months in particular and beyond. We currently, from a compliance perspective, are reviewing how we handle crypto. So it is something the compliance department's looking at in great detail in terms of listings. You know, so we've seen listings, for example, in the US like Coinbase, which have travelled fairly well. But we have this week listed an ETF, which is based on crypto assets. So it's an ETF listed on ASX or quoted on ASX that invests in companies like Coinbase globally. So that's been a great development and really the start of things to come, I think.
Yeah, I think so. I think it's great. The obviously Beta Shares, I've worked with them, you know, previously, and I think it's a great starting point because obviously, I guess if I look at the younger generation, yeah, they're very interested in crypto. And again, you start to see even the CBA announcement, you know, with crypto, and a lot of fintechs are already dealing in that space. And I think it's going to, for me, 2022 is going to be, you know, quite lively in terms of what happens, you know, with the market. And I guess with the regulatory focus now really on blockchain, and you know, I think we'll probably see some advancements there. So there's lots of interesting things that come out of that, like how do you audit crypto? You know, how do you disclose it? You know, controls around that. But you're also starting to see Australia, which I'm very happy about, is starting to get quite proactive in this particular space, because I think from a competitive landscape, you know, we want to make sure that, you know, people that have crypto and have funds, you know, will be looking to stay in Australia rather than moving offshore. So that's my hope, but we'll see what happens.
Yeah, absolutely.
So Seb, any predictions for 2022? I know you've been very, very busy. You love working at midnight, 2 in the morning. Do you expect another year like that next year?
Yeah, look, I think it's you know, I'm not that good at predicting, but given that we've got a pipeline that's, yeah, I'm not a great investor myself, but given that we've got a huge pipeline, you know, probably 6 or 7 IPOs that are already looking to potentially come on early next year, and I think we'll still see more come out of the woodwork. Yeah, I expect next year to be pretty big as well. I don't know what the macroeconomic environment is going to be like with inflation, etc., but realistically, yeah, there's still the fundamentals are pretty strong. So I expect to see next year pretty buoyant again. I think James was probably better qualified than me, but yeah, my gut feel is I can't see it going away at the moment.
Yeah, and James, I guess for the last question there, I guess in terms of your view, in terms of predictions for 2022, obviously it's been very, very busy at the ASX. I would expect you'd say you expect that trend to continue, but you probably have some good insights in terms of whether or not that'll be true or not.
Yeah, look, I always qualify this subject to market conditions, and I think, of course, we've got the inflationary issues that the world is sort of dealing with, and it'll be a delicate balance for the next few months. But assuming, you know, the market just needs to sort of hold up, it doesn't necessarily need to be spectacularly growing for IPOs to happen. And as long as volatility remains at reasonable levels, then IPOs will continue. And so specifically in terms of our pipeline, absolutely, it's huge. There's a lot in the pipeline at the moment. In fact, the year hasn't finished yet. We've still got about 30 listings to go between now and Christmas. So that's been really, really encouraging. In the new year, yeah, we've got some companies across the sort of fintech space on the way, and they're sort of more potentially sort of wealth tech and capital markets related. Other tech companies, a couple from the software companies from the US on the way, and then also healthcare. Healthcare is going to be continue to be really interesting. Biotech and medtech companies, including also some from the US as well, and then a few consumer companies in the pipe as well. On the international front, New Zealand will continue to be interesting, and that'll be across a broad range of sectors. So So yeah, a lot of really interesting things to look forward to in 2022.
Okay, well, thanks, guys. That brings us to the end of our discussion, and I want to thank James and Seb for your valued insights, and hopefully everyone thought that was a very good session and quite informative. This also brings us to the end of our Fintech Fridays for the year, and it's been quite a good year. Up on the screen, you can see the different companies and associations that have participated. So I think it's been really fantastic in terms of getting global participation, as well as involving people like the ASX, RegTech Australia, and Fintech Australia. It's our third year running for Fintech Fridays, and over this time, we've seen fintechs, rise in prominence, here in Australia and globally. We started doing this initiative to help drive awareness and understanding for the fintech ecosystem, and that we knew for fintechs to thrive in Australia, it required the efforts of government, educational institutions, industry bodies, and private companies such as BDO, who have the knowledge and resources to help fintechs navigate as they continue to grow. Either if that's raising their visibility through the right networks, providing financial education, being the voice for regulatory change, or preparing their business for things like capital raising and listings. We've tried to provide a platform for all those operating in the fintech space to ask questions and understand more deeply the ecosystem that they operate in. And I think we've achieved that over the past few years. And I wanted to thank all the contributors and audiences for taking part in this initiative over the past year. And in particularly, even the team here at BDO, they've done fantastic work in terms of preparing for these sessions over the last year. I wanted to thank the recently retired, exited CEO of Fintech Australia, Rebecca Shaw-Guppy, who's made marvelous contributions over her last 3 years in her role as CEO of Fintech Australia. And I think she put it poignantly well in terms of, she quoted, quote unquote, fintech has grown from being considered a niche part of the startup ecosystem to an industry in its own right. And I think I've really seen that over the past 3 years. So that concludes the Fintech Fridays for the year. Thank you for a great 2021. We'll send out the slides and the presentation details and contact details for all of us. And we have a short survey if you can fill out. So hopefully we'll improve our process for next year. Until January of next year, enjoy your time and have a great rest of the year. Thank you. Bye.
Thanks, guys.
Thanks, Tim. Thanks, everyone.